How's it going, folks? I hope you're doing well. I wasn't going to do another video today, but I thought, you know what, this article came out today and I was so blown away by it that I thought I really needed to talk about it. So if you haven't seen the article today or you're reading it tomorrow, Fannie Mae came out today, and if you don't know who Fannie Mae is, quickly, it's basically the government entity that guarantees loans that most people made. They're the ones that bailed out the banks back in the housing crunch and that kind of stuff. Anyway, everybody follows their guidelines because if you want your loan guaranteed, you have to follow their guidelines. So they put out a lot of data. Today, they came out and said what they thought was going to happen because of what's going on right now, how that's going to affect next year. And they came out and said, yeah, we think that 2021 interest rates are going to get even lower. Now, why is that a big deal? We had a long-standing lowest interest rates on mortgages as far as the average of what they consume in data and stuff like that. But the average, the lowest was back in 2012, kind of on the upswing of the real estate market. It was like 3.3 or somewhere around there, right? Now, you may have gotten an interest rate below that, but that was the average market of what Fannie Mae says it was, right? So we actually had a new low a couple of weeks ago in March because of what happened with all this coronavirus stuff. And it went down just below that, like 3.29 kind of thing. I actually know somebody that locked at 3, right, with a certain lender and that kind of stuff. So there were definitely some, in there, but the lowest we'd ever seen. And it's been bouncing up because of different things and that kind of stuff. But they actually expect, once all the dust settles and stuff like that, for it to go even lower, for us to set new records between now and the end of the year and then into going next year. That is insane for refinancing and stuff. Here's why. Interest rate doesn't mean everything in lending, but it means a lot. And here's why. If we take just simple math, right? We're going to take a $200,000 loan, right? A $200,000 deal. The difference between a 4%, which is what a lot of people have, it's a great interest rate. The last couple of years, it's been bouncing around that 4, all the way up to 5, all the way down to 3.5, that kind of stuff. But if you have a 4% interest rate on $200,000 by refinancing or buying a new home at $200,000 with a 2.9, between 4% and 2.9, you're talking about $120, $125 a month. Over the lifetime of the loan, $40-something thousand. So we're talking tens of thousands of dollars just with that little bit of dip. On the flip side, like I said, the buying, it can be the difference. That 1% can add tens of thousands of dollars to your top end budget. What you qualified for at 4%, you actually qualify for 10, 20, 30, 40, whatever, depending on, what the value of your home you're purchasing, that kind of thing. But you can add tens of thousands of dollars to your buying power just with the drop in interest rates. So it's a big deal for refinancers, for existing homeowners, for new home buyers, and that kind of thing. This can really play a lot, right, with that kind of stuff, which is why it's a big deal. Here's what I found really interesting. The whole article was about interest rates, but they snuck this little quote in there, and I happen to agree with them on this. They think even though the short term, with all this stuff that's going on, we might see a little bit of a dip in home values. I don't think we will. I haven't seen it so far in appraisals and stuff like that. But even if we see a flattening, not the increase that we've seen in the last 5, 6, 7 years, they're still expecting, when you average everything out, finishing this year and into next year, they're actually still expecting a 2.5% to 3% increase in home values by the end of 2021. I agree with them. This is a short-term, it's not a short-term problem, folks, it's a long-term problem. But when it comes to this unique circumstance, meaning the values of our homes, I think it's a short-term issue that we might have with a long-term still going forward. Now, again, this is my opinion, this is Fannie Mae's opinion, but I thought it was a huge deal to talk about. So I hope you found it interesting. I hope you find it. If you have any questions about how that stuff works, or refinancing, or buying a new home, obviously you give us a call, we get you taken care of no matter where you're in the country. We've got somebody in your area. Appreciate y'all. Talk to you tomorrow.